Hey traders, going into the week of the 22nd of December, 2025. Last week, the VIX moved from 15.73 to 14.91, telling us volatility is low and traders are less cautious. The US 10-year yield sits at 4.149% versus 4.186% last week. TLT is above its 30-week SMA and exhibiting a positive slope. Using Weinstein's framework, bonds look like stage 2, hinting at strength. Options sentiment data shows that total put-to-call ratio reads 0.75 versus 0.71 last week. Additionally, equity put-to-call ratio is at 0.63 versus 0.53 the previous week. This shows investors are becoming cautious, but levels remain well below contrarian extremes. Market breadth data shows that the percentage of stocks in the S&P 500 above their 50-day moving average is at 57.45% versus 57.76% last week. Furthermore, the percentage of stocks in the S&P 500 above their 200-day MA is 58.05% versus 62.35%. Finally, the percentage of stocks in the S&P 500 in Stage 2 advancing phase is 49% versus 52% last week. This signals a late cycle or transition environment, not a broad risk-on phase. Indexes can still hold up, but fewer stocks are doing the heavy lifting. What a quant desk would do. A quant desk would stay modestly long but reduce beta, focusing only on top relative strength names in technology sector and defensive rotations, while avoiding broad exposure and using tight, defined risk positioning in a low volatility, late cycle environment. Key takeaway: this is a selective, late cycle market. Stick with proven leaders, avoid broad bets, and prioritize precision over aggression. This is data vesting, trading with science, not emotions.